Podcast is now starting. All attendees are in listen-only mode.
Good Thanksgiving Eve, everybody. What's everyone thankful for? Hi, Rainer. I see you in the house. Your interview begins in 1 hour from now. You're more than welcome to hang out with us. Hello, Dragmore, Forex Gal. Kevin, how are you, buddy? Okay, so I want to start off with the USD NOK. Blake called this trade yesterday, pattern in play. A lot of great pattern in plays lately. Nice lead on it. He's looking for 81 for a target on it. Nick still has big leads in Euro Pound. And Grega finally closed out his Aussie short, which I don't know how many pips was it? 75, 82, 260 or so. Great trade by Grega. So even in a shortened week, some great ideas. Pattern in plays working quite well. So on this Thanksgiving Eve, it's time for us to think about what we're thankful for. What's everyone thankful for? Anyone in here thankful for FACE, which has been in operation? Okay, Medras, since last April. Has it helped you, Elena? Kevin, all you guys, has it helped you? So I have a suggestion. If you haven't become a subscriber and it's within your means, that's how you could say thank you to the work that the team does every day here for free for you. And let's just say that you don't have the funds. Thank you, Cedric. Appreciate that. And maybe it's not in your DNA. You're so used to getting everything for free on the internet that you just can't pull the trigger to pay for anything. So there are many ways to express gratitude, especially if you don't have the funds. There are a lot of lost sheep out there. In fact, Rainer Teo is going to be with us earlier, and his mission is to save retail traders from self-destruction. Looking forward to that interview with Rainer Teo. You could go out on social media, Twitter. My handle is Forex Stop Hunter. Everyone knows Blake's. Okay, I thought so, Kevin. But you could go out on social media and spread the word, because there are a lot of people out there that are falling prey to hucksters and sharks and barracudas out there, promising 100 to 1,000% returns. They all have the secret. You're very welcome, Address. They're trying to sell the secret when we all know there is no secret, or that the secret is just hard work and perseverance. So you could go on Twitter and Facebook and Instagram and post a testimonial and just be completely truthful about what your experience has been, and perhaps you'll help save some people from the wolves out there. That sound like a good idea? If you can't afford or it's not within you to become a subscriber, that you could go out there and spread the word about our free room. It may save some people some heartache, right? So if you could save people some heartache, you're planting good seeds, because you're helping and mentoring and trying to help people avoid stepping on some of the landmines that you have personally. So I just want to go to a few of the markets before I pass it over. So great call from the highs yesterday by Blaker. And then we know he rode the yen all the way down, looked for a rally back to 1250, 1260. Here we are pressing the lows. So rode this wave all the way down, covered at the lows, started putting out shorts again here. Another great trade. Blake is very hot lately, making some great calls. It's no surprise to most people. So with what's happening in the yen, I still think the yen crosses aren't done going down. Although the euro had one heck of a rally, the pound had one heck of a rally. Here we are again threatening this 48 level. We're only about, after a big rally this week, this is where we came in Monday. After I talked about a short at 940, I certainly didn't expect this much of a rally, but it looks like perhaps this time we may fail and close under some of the significant daily support that we have here. To me, it looks like we're getting too many tests of this major breakout. Here's one. Nice bounce here. Blake and I were talking about how some of these, again, cross trades were like a floorboard starting to cave. You know, you're hitting it with a mallet, and each time down, less stability in these pairs. So still think the long-term viability, I know a lot of people are looking for 46. I think 44 is doable. I've seen counts all the way down to 41. Euro yen, not much better. It had a nice recovery. But again, some of the people waiting for confirmations, we're not that far from confirmed breakdown from the bottom of the range. So again, staying negative on yen crosses again was correct again this week. So perhaps a payday, maybe after Thanksgiving, and of course we've had a decent bounce in the Aussie, but it's starting to give it back. Something that I'm starting to pay attention to, and it may come into play over the next several days, is Euro Aussie. Okay, so looking at the Euro Aussie on a shorter time frame, we've achieved the 1.618, but you look at it on a 4-hour, and if it could hold here, we have 1, we have 2, maybe we get one more shot up here towards above 56, but so far this non-confirmation has held it back. I'd like to see one more push up for a 3 drive. So I'm assuming that Nostra Volgi is here, and I'm going to hand it off to him on this Thanksgiving Eve. Thank you, Steve, for all your great analysis that I've witnessed over the last 7.5 months. How are you today?
Hey, Dale. Good morning. I'm good.
Good
How
morning,
have you been?
Steve. Good, buddy. So
So an
we're
extended
knocking out
holiday is coming for you Americans,
Yeah.
right? I bet you're more than happy.
Yeah. So, you know, I think it's a day that all of us should celebrate more than once a year. What do you think? What are you thankful for this year, buddy?
Quite a few things actually, but you know, I try not, I try not to look back as much as possible.
Okay.
You know, neither for the good or the bad. I mean, you know, always looking
Okay.
forward. I think is the best approach. I think, you know, as always, as long as we're healthy, you know, that's the most important thing, and our families are healthy. I think.
Yeah, that is. Yeah,
I think that's something to be to be grateful for every day, right?
I concur, buddy. So we're knocking at the door on Euro Yen on the basement of support here. You think this time we're going through? I know you want to wait for confirmation, but we're not that far away from it, are we?
You know how it is. The more the more you test a level, you know, the higher the chance that it's going to fail at some point. And yeah, we've made several attempts on a daily closing basis. We failed every single one of them. I can already count 1, 2, 3, 4, 5, 6, 7 ones, and you know, might be the day. Why not? But you know, it's a very well-defined range. I believe that a lot of people are watching this range in the market, and I believe that once it actually fails, it will push through. It will it will have at least some decent follow through. So instead of jumping the gun, I'd rather see a confirmed close below 130. 150, let's call it roughly, to be on the.
Okay, buddy, I passed you the screen.
I just accepted.
There we go.
Yeah,
okay.
So there we are. So yeah, I think once we get a confirmation, then we should be looking lower towards 128.70. So it's roughly almost 300 pips lower. I think is the next serious level of support.
You're also very sanguine on the S&Ps. You pointed out how like the DAX was the leader, and some of the other global bourses were showing more relative weakness in the U.S. And you certainly got your forecast manifesting with that huge up day yesterday in S&Ps. Did we make a new high marginally?
Yeah, I think we incremental at least on the SPX 500. I think for 0.1 handles we did make a new high.
Okay.
The question is what's going to happen now with the ascending channel, because making an incrementally new high, doesn't tell me much, because we still have this nice formation, this nice ascending channel, which has been respected several times, I mean, in combination, the support and the resistance. So, that allows some room, for a little bit more of an upside, like another 5, 7, 8 handles, depends on how soon, because this is an ascending channel, so it keeps moving.
And the Nikkei still looks like a failing rally setting up here. You can show the comparison with U.S. markets making new highs, and Nikkei still way, way, way off the highs.
Yeah, the Nikkei, I think, has the potential of pushing lower once again. I think, but that's that's simple intuition. I think that the DAX has the same potential, and I'm saying that this is simple intuition plus some Elliott waves for the following reason. Because if somebody wants to be, somebody wants to do like some very basic technical analysis on the DAX, somebody will say, okay, listen, we broke out from these highs, we came down, we retested it, so why not go directly to new highs from here? I mean, this is an argument that has basis. But on the other hand, if you look at lower time frames, the move lower was a 5-way move, and you don't see 5-way moves being the beginning and the end of a correction. You know what I mean?
Do you have any thesis or opinion, Steve, on why U.S. markets are more resilient than the rest of the world at this time?
Not really. I mean, somebody can make a lot of arguments. For example, if we take the argument of the Nikkei, for example, somebody can tell you that, the Nikkei had already overshot by a lot recently the US stock indices. And, despite correcting lower, if you correlate them on a short-term basis, still, there is no reason to worry about this kind of correlation having to do with, the S&P responses. Then somebody else can mention about the DAX, for example, that, euro strengthening has played a big role, because, as we very well know, a lot of investors are foreign investors in the European markets and things like that. But, I rarely like to make arguments like that, because sometimes you always know that correlated markets, on occasion, some of them are going to underperform, some of them are going to overperform, but monitoring markets that turn first still can give you a nice signal about pressing on with other markets, or paring back positions in other markets. So the same thing happens with currencies. If you remember, I was following very closely the USD CAD, USD NOK correlation. So despite losing the USD CAD trade, I took the USD NOK trade quite early. Other times that correlation might change. So I think that paying attention to tickers that are closely correlated to each other, and seeing which one precedes what at what time, can be one of the factors you will take into account when making a trading decision. That's
okay. So knowing which one's a leader and which one's a follower.
Yeah, and sometimes these can turn around.
Yeah.
I mean, let's say between gold and silver, sometimes silver might lead gold, sometimes gold might lead silver. So, this is something that you need to pay attention to, and constantly. It's not that because at some point USD CAD was leading USD NOK, that means that forever USD CAD is going to be leading USD NOK on the turns.
Good point.
So one other thing I wanted to show, by the way, because you're very right, Euro Yen is definitely one of the pairs we should be watching, because it's on the precipice of breaking down, is the cable. Because the cable once again proves that this is a triangle. Today it's spending the third day in a row trying to break above this resistance. It has failed to do so yet, which proves once again that this triangle's resistance is of importance. That doesn't mean that it can't break through, but it means that even the fact that it has taken 3 days to break through, even if that happens, which personally, I'm a little bit in doubt. I mean, I don't see it having the proper momentum. I think that, for people that want to trade short term, a good reward to risk trade is probably being short against the highs we had a couple of days ago for another push towards the triangle support. That doesn't mean it's going to work, but it means that the reward to risk ratio is there, and the chances and the potential is, quite good. Personally, I took half a position short here. I had already kept another half position short from 131.12, something like that. So now I have a full position. My stop loss is above 133. So I'm a little bit invested in it. So I think it's a good potential. The triangle is definitely valid on a technical basis perspective. The pound, has showed after this impulsive move lower that it's definitely not on the strong side of the currencies. So why not?
Since you brought up cable, the guppy is pressing that breakout level again. How's it look to you?
Which makes sense because which makes sense because I was about to show the USD yen, but let's go first at the guppy. The USD, listen, the guppy. The pound yen rebounded very nicely from the level I was looking for it to rebound because it was the breakout level. But if you remember, we had said a few days later that, listen, okay, it rebounded from there, but it did not produce an impulsive move. So despite, rebounding from there, and that could have easily ended up being a classic case of breakout, retest of the breakout level, resumption. It didn't do so because what it looks like is being in a triangle as well. So as the cable, this looks like being on the triangle as well. But on the other hand, with the USD yen being weak, I'd say that this support does not look good. It hasn't broken yet. So I can't tell you that I'm bearish one way or another, but I don't know. It doesn't look good to me at the moment. Definitely the level to watch is this horizontal support zone that I have here. It's roughly, let's say, at 147.70, and another signal here is definitely going to be what the USD yen is doing. So the USD yen, after one buoyant day, which, if you remember, I mentioned here that it might be rebounding from the 112 level, but it still doesn't look good to me. We're back testing once again the 112 zone. This 112 zone, it's actually 111.60 to 112 zone. It has been acting, quite a few times in the past as support resistance. It's also hosting at the moment the 200 daily moving average. So I think this is a very key area for the USD yen. And if we end up failing from this level, I think that the vast majority of the yen pairs might break down, or plenty of them might end up breaking down. There is also another potential here. We can draw it. There is the potential. It's just a potential at the moment, right?
Mm.
Even if we rebound, that this will end up being a head and shoulders formation as well, with this 112 level being the neckline. The only reason I'm saying that is because even if we see another rebound from the 112 zone, that is not going to turn me bullish, outright bullish. That's why I'm saying that. What I'm trying to say here is that I'm going to require a lot more than another rebound from the 112 zone to turn bullish this pair. I will actually need to see a decisive daily close above the 113 level to be persuaded that this was a retest of the 112 level, and the pair wants to resume the upside now. But until then, I remain very skeptical of the USD yen strength, and I'm viewing it as something that most probably wants to break down further.
I was talking to, hey Steve, good morning.
Hey, good morning, Blake.
Hey, I was talking to one of the guys that I trade with yesterday. He's like, he'd been reading a lot of analysis in recent weeks about the fact that the yen's just not being used as a funding currency anymore for carry trades, and it's losing that status, if you will. And so I found that rather interesting, that it is happening. But a lot of people, and I always try to make this point, that correlations don't die out instantaneously. It takes them a while to take hold, where those correlations really start to break down. And you have a situation where stocks and equity markets and global equity markets and Nikkei continues to rally, yet the yen continues to outperform the way that most people would and have imagined it working. And the problem is, when you take the yen, and I'm going to continue to make this point, I've made it for a while, but it's still very relevant, is the market positioning in the yen is still very short yen as a whole, and it's going to take some time for those positions to unwind. And you can tell with the dollar yen, the thing could not hold a bid for the life of it.
Yeah, it can't. And despite the BOJ having done everything on a vocal and actual level on the monetary policy standpoint, everything.
Hey Blake, your buddy tell you what they were using in the carry trade now instead of the yen?
No, I mean, no, because it's just there isn't. It's like
there is no carry trade.
Well,
there is with emerging market currencies, actually.
Yeah, I guess you could take some of, like, the peso or the rand or the those really high yielding currencies, but yeah, I mean, but right now it's not the yen, and but again, everybody's positioned short yen. And so the problem is going to be if we run into a little bit of a liquidity trap and those start to reverse. Anyway, I'm going to let you continue on. I just wanted to mention that about the yen. I'll be back in a few moments.
Yeah. Blake is going to be with us in 10 minutes as usual. Okay, so Dale, what we were saying, USD yen definitely doesn't look like it's buoyant. I mean, it looks extremely heavy. I don't think the BOJ can surprise in any other way or form, at least not in the short term, or unless something, happens. So, what's going to get? I mean, if under the current circumstances and under the current environment, and after the fresh win of Abe in the elections, and after the fresh commitments of Kuroda, what's going to get the USD yen bid? I really don't know. But I wouldn't want to be long, honestly. Somebody wants to be long against this zone. I understand it. The reward to risk ratio is there, but it looks very heavy to me. Okay, so let's have a look at a few questions, because yesterday we had plenty of them. I barely managed to cover them. And, usually I get more ideas, because sometimes, I have things in mind that, oh yeah, I wanted to have a look at crude before we go to questions. I just remembered. Okay, crude still behaves extremely nicely. You remember, since a long time ago, we had said, after breaking out above the 55 level, which we thought might create resistance, and it did so, but only for 2 or 3 days. We said that from this point on, that the 55 level is gonna be considered, a support area. It acted perfectly as a support area. And crude is currently pushing to new highs. So, undeniably, crude, and even breaking out of this channel, is also another proof of how bullish crude is. So undeniably, crude remains very, very strong. But I would caution, after pushing to new highs one more time here, I would caution, against establishing fresh longs, because, if you were long when we were seeing the inverted head and shoulders formation on the breakout, on the retest, all that is fine and good. But I think that, you know, after pushing to new highs, for example, you know, I have a 127 resistance here at the 58.50 level. You know, I think that, you know, the potential of being long before we see a bigger pullback is diminishing. I mean, the potential to make money, I mean. So, you know, the risk is becoming, you know, a lot more than I would like. So, despite seeing that, you know, crude remains very, very strong, I think that the buying opportunities are drying up at the moment. So I would caution people against establishing fresh longs after we push now to new highs. We also see some RSI divergence here. I think it's very clear. I mean, the previous high here had an RSI of, what was it? It was close to 80. We're currently at 68. So this is, you know, this is some reliable RSI divergence. So you know, be a little bit careful with crude at the current juncture. And let's have a look at a few of the questions. I short Euro Aussie and Pound Aussie. Still see potential to short. Let me have a look at them since you mentioned. Let's have a look at the Euro and Pound crosses since you mentioned it. Listen. First of all, we had the 161.8 here where we actually failed. Do I see the potential of being short here? Depends on what time frame you're looking at. If you're talking about a short-term time frame, yes, sure. We can come down to retest this 154 breakout level. We can even potentially come down to retest this 152 level. But do I have any reasons to believe that in the medium to long term this pair is bearish? Absolutely not. Since February, this is just a sequence of higher lows and higher highs, right? So the Euro Aussie is a textbook uptrend, in a textbook uptrend at the moment. So if we're talking about short-term counter-trend trades, sure, yeah. I mean, the potential is there. If we're talking about something more than that, I would be very careful if I was you. Same thing with the Euro Kiwi. The Euro Kiwi is in a confirmed uptrend, right? It does react once again, though, from the channel's resistance, and that might, you know, yield some more downside. But would I be short for the medium to long term? No, I wouldn't, because I have absolutely no confirmation of a reversal. You know what I mean? We're still seeing higher lows. As long as we're still seeing higher lows, you know, the trend is intact. Let's have a look at the Pound Aussie and the Pound Kiwi as well. The Pound Aussie, same thing. Some weakness here. We had an outside black candle yesterday after overshooting this potential of an ascending wedge, but still no confirmation. I mean, we haven't even retested the previous high, which is at 173.60 roughly. So, you know, can it pull back? That's what we were seeing down there, that perhaps it rebounds and it pulled back there. It can. But still, once again, we're talking about short-term trades. Pound Kiwi, same deal. It registered the fresh high. Perhaps it's going to move lower, but still a sequence of higher lows, and most importantly, a massive breakout of a long-term bottoming formation. So, you know, I wouldn't want to be short any of these pairs to hold. Okay. Thank you for your kind words, Cedric. Kevin says morning coach, and that he's a subscriber. Thank you.
Yeah, Kevin's a stalwart.
Emdris also says thank you for this webinar. It's our pleasure. Euro Kiwi, Euro Aussie questions, we already covered them before seeing the question. Add another piece long Euro USD at 111.74. Now I'm 2/3 in it. Lucas says, let me Sorry, that was for the chat. My bad.
Don't fade Luca.
Yeah, let me have a look actually at the euro, since I'm pretty sure a lot of people are asking. Listen, look, I'm totally with you here, mate. I'm you know, I as I said, the 118.50 rejection. Okay, it keeps you know, the bears you know, quite content with what's happening, but on the other hand, you know, the inability of the euro USD to push lower, and the speed with which, the slow speed with which we corrected, you know, at the extent we corrected, makes me think that this 116.80 level is going to be hard to crack to the downside once again. So as long as that level holds, I'm inclined to be bullish instead of bearish. Okay.
You know, Steve, it may not even get there. You know,
Yeah,
the
the
bears that did not cover on the negation of that head and shoulders top are right now. You're right. They probably feel like, well, okay, so I've ridden out the storm. It's heading down now, and you know, they may be in for, you know, a rude surprise. In fact, you know, this market's set up to squeeze people so hard that their eyeballs might pop out on the next.
Absolutely. Even if you see the 4-hour chart, here it is. I mean, there it is. It's a clearly
Classic
defined.
Yeah.
There it is. So you know, we know what's going to happen if we break above this level, right? I just marked it with red. I mean, we know what's going to happen. I mean, in the vast majority of the cases in such a scenario, I expect new short-term highs from there. So I think this is the area to monitor at the moment. Roughly, let's call it 117.70. So that's what I'm going to be monitoring for sure. A break of that area makes me quite confident that, you know, we're moving higher. Pedro is asking, are these crazy US equities ever going to pull back? You know something, Pedro? They're going to pull back when people expected the least, most probably. And now, regardless, I do believe that you know, they are going to be pulling back quite shortly. You know, I cannot predict if it's going to be next week or whatever, but I do think that currently the reward to risk ratio of being long is just crazy. I mean, it makes absolutely no sense whatsoever. So, you know, it needs some patience sometimes because the markets can remain irrational for a period. They've already done so for a decent period of time. But I do believe that they're going to pull back quite soon. I heard Kiwi and Swiss are used as currency, says Emdris. Kiwi, I kind of doubt it. Swiss, yeah, I do believe that. Everybody's positioned short yen or short USD yen. Obviously, that was a question for Blake. No, Blake meant that everybody's positioned short yen, not short euro, USD yen.
Short yen, long dollar yen.
Yeah. USD CAD is below. Joe says USD CAD is below trend line. I think that's a good place you can start from, Blake. I hadn't had a look of the USD CAD, so if you want to start from there and answering Joe's question.
Yeah, sure thing. I'll take a look, and I'm going to take a look at some majors here.
Okay, let me pass the screen.
Oh, I got it.
Oh, you already took it. Okay, good.
Yeah, so you know the dollar yen's actually approaching its lows. We're looking like we're going to hit new trend lows. Just realize that the 200-day moving average is just below here. We're at the 38% retracement. So even if we hit new lows here in the dollar yen, I don't know if I would be chasing it per se, but there's a lot of decent setups if the dollar does weaken. Joe, did you say Joe asked about the?
She mentioned actually that the USD CAD is below the trend line.
Oh, okay, yeah. Okay, so I'm sorry, I'm getting all my questions together here. But yeah, so the dollar Canadian actually is this is a big, you know, we talk about like the canary in the coal mine, where the dollar Canadian might be signaling to us that maybe some dollar weakness is coming. The dollar CAD, if you take a look at this, here's a 4-hour chart, and I'm just gonna go ahead and you can see this trend line here. One of the big reasons why I'm keeping a very close eye on the dollar Canadian is the failure, first and foremost, at the 618 retracement. You can see it right there, right? And now we're cracking, and you're correct, we are cracking below that trend line. So I'm expecting a move down here now. And there are a lot of setups for dollar weakness. How many of you guys and gals trade the Aussie or the Kiwi, the Aussie dollar or the New Zealand dollar? Did anybody out here trade those? You guys listening in? Okay, a few of you. All right, take a look at the Aussie. All right, this is a classic descending wedge. All right, now I was hoping the Aussie was going to get down to the 75-cent level. You know, but if everybody's expecting it to make the 75-cent level, you know, myself included, I don't know if we're going to make it all the way down there. But the Aussie US dollar, this is one of those that I don't think a lot of people expect to go higher. And if you look at what's happened just over the last month and a half, we've gone from 81 cents to 75 and change. All right, that's a big move for the Aussie dollar, and it really is. I mean, that's a big move. You got gold that looks relatively well bid. It's not going down. It's not going up, but it's not going down. You've got silver that's trying to stabilize too. So these precious metals are holding up relatively well. And I'm looking at this Aussie dollar thinking, man, if we could break above 76 cents in the Aussie, that's going to be a pretty bullish move. And I don't know if it's going to happen today. We do have the FOMC meeting minutes for those of you that might be leaving early. I've actually, my kids have a half day today, and I have to help out my wife, so I might miss some of the meeting minutes. I should be here for the release though. But the fact of the matter is the Aussie dollar looks like a setup for a break above 76 cents. If it breaks above 76 cents, it's gone. I mean, we're going to go from 76 cents to probably 77.50 or 77.30 relatively quickly. You know, I don't know if that's going to be the end all be all, and then the Aussie's going to 90 cents. I wouldn't say that, but I think the risk of it popping 100 pips over the course of the next couple of days, I think.
Love your charts, man.
Thanks, Dale. I think that setup is valid, and it's there.
Nice falling wedge. I love wedges.
Yeah, me too.
I never wore them, but I like to trade them. You know, people used to wear wedgies. All right. I don't like being given one, a wedgie.
These are my favorite setups. Of any setups is a descending or an ascending wedge. They are difficult to time because you have to be, you know, you have to be there at that moment, you know, that it's breaking, and then you have to wait for confirmation. But once you get that confirmation, so what I mean by that is you got to be around for when it breaks, A, and then B, you have to, you know, get a bar confirmation. So in this case, it's a 4 hour. So I would, you know, probably wait for a couple hours, make sure that it's closing above that trend line. And once it does that, then you usually have a pretty decent move. And then, you know, it tends to be pretty explosive because you have these, you know, these reversals, and reversal moves are great. They're really, really nice, quick moves typically. So you have like the Aussie looks like a nice reversal, excuse me. The Kiwi setting up too, and the Kiwi's been beat up. I mean, but the fact of the matter also in the Kiwi, if you look at the daily chart, we have a possible false breakdowns. So, if the Aussie breaks above 80 cents, the Kiwi breaks above, 68.50. I mean, you could get a pretty decent lift in some of these commodity currencies. And again, what is cluing us in right now? Go to the dollar Canadian. The dollar Canadian's already starting to show its hand. It's already starting to make its way lower. And I think this is, once you get the Aussie moving higher, you get the Kiwi moving higher, and you get the Canadian moving higher together, that's a pretty good recipe for dollar weakness, especially against the commodity currencies. Now,
gold's been holding up rather well too. They keep trying to knock it down, but the gold is also kind of in line with what you're saying here.
Exactly. Okay, so let's talk about that for a second. So here's gold and Monday's candle, and I'm gonna zoom in really fast, and here's Monday's candle, right? So I was looking at this candle on Monday. I'm like, man, they beat gold down with the ugly stick, and I was thinking to myself, this thing is going to get clobbered, because we had a nice breakout here. You can see this. This is Monday. We had a nice breakout here. We were rallying. We gapped up. It looked great, and then all of a sudden, the bottom fell out of it, right? So I was sitting here looking at gold going, oh man, they're just going to crush gold. They're just going to crush it. And they didn't. The next couple of days, here's an inverted hammer, and here's today. And so, yes, to your point, Dale, gold is holding up. Now, is gold bullish? Not yet, but is it, setting up possibly to be bullish? It is. And so I think if you get gold above 1300, gold's going to have a nice little explosive move, confirming the Aussie breaking higher, the Kiwi breaking higher. Hell, even you think about let's go over to the euro dollar really quick. Okay, you think about the euro and you think about what's happening in Germany politically. Okay, everybody just beat down the euro a couple of days ago. Here's Monday, the euro got beat down. Okay, the euro for all intents and purposes is technically one of the best behaving currencies that we have in the market right now. Okay, why do I say that? Well, and this is following the failed breakdown of the head and shoulder pattern. So we had this great head and shoulder pattern. Everybody's on it. Over the last couple of weeks, been warning you, hey, this doesn't look like it's going to work out, and it didn't, and we exploded higher, as we all had talked about the last few weeks. And then, so you have the euro dollar, it exploded higher. Its pullback has been limited to this broken trend line. You can see we got this broken trend line, and all we've been doing is back testing that trend line right into support. And now the euro dollar is holding up. And if you've been short the euro, like, oh my God, the euro's going to hell in a handbasket, then Merkel's never gonna put together a coalition, blah 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 blah, whatever you're doing, the last since Monday, since this beatdown on Monday, you're finding yourself wrong-footed. And so if you get the euro breaking above, like, okay, so I'm giving you guys numbers. You guys want some numbers? I'm giving you a bunch of numbers. You might as well just jot them down. I'm going to be eating turkey and probably drinking a beer. So write down these numbers. The Aussie dollar at 75 or 76 cents. The Kiwi dollar at 68.50. The euro dollar at 117.70. If all those break out at the same time, you got yourself a nice little, concoction of dollar weakening against everything. And if that happens, and then then you want to add fuel to the fire to this whole thing, you remove the Americans out of the situation. So you want to stick it to the Americans, all of you European and Asian traders, here's your chance. You got a bunch of North American traders that are gone. They're all, you know, with family, celebrating a Thanksgiving holiday, not in front of their computers, drinking beer, eating turkey, sleeping at the table. You want to get them snoozing. You know, you get the euro breaking out, you get the Aussie breaking out, you get the Kiwi breaking out, the dollar's going to get walloped. And that is, you know, I always love these opportunities because, you know, because when North America is not paying attention, that's a lot of times that's when the market can really take advantage of people. And I am North American, but I'll be in front of my computer because I know the setup. So Ziggy said, Blake, give the numbers again, please. The lottery winning numbers are 5, 15, 42, 64, 38, and 142. There you go. Those are your winning numbers for the Mega Millions 2000. I'm joking. Dale, I have bad humor because I was drinking beer last night. That was bad. That was bad. Okay, so let me give you those numbers again. Where was I at? Oh, Aussie dollar at 76 cents. Kiwi dollar at 68.50. Okay, here. Ready?
By the way, I'm going to play those numbers that you just said on the Powerball.
60, 64, 92, 38. Just kidding. How you doing, Stelios? All right, here you go. You got the euro dollar 117.70. You have the Aussie dollar at 76 cents. The Kiwi dollar at 68.50. Okay, you guys see them? And if you use ForexAnalytix, you actually get notified when they go off. Here, how's that for, you know, taking the pressure off of you? All right, and yeah, and you could get you'll get a mobile app notification if you're using ForexAnalytix.
What were those numbers again, Blake?
Oh, the lottery, the Powerball, 4, 2, 12, 163. I'm joking.
Yeah. Oh, that's my bank wire number. All right.
Is that was your routing number? Sorry about that. Yeah.
What's going to happen if these actually end up being the numbers for the lottery?
That would be funny. Now I'm gonna. I will explain to you guys. I never play the lottery. Well, I unless it is a ridiculous amount that, you know, then at that point I actually will find a few people and say, hey, give me 20 bucks. Let's go in the lottery. We'll split this if we do it. I never do the lottery. I'm not a lottery person. I don't do lottery tickets. I don't do lottery. I feel like it's a tax on, you know, everybody else. But whenever it's like ridiculous, like, you know, 400 or whatever the numbers are that are, you know, really high, I sometimes I'll throw in 20 bucks to do it. So
they say the odds of winning a lottery, Blake, is you line people up from LA to New York City and shave their head, put a target on their head, and then send up an airplane, and randomly it just drops a tennis ball out from where the window, and whoever it hits on the head wins the lottery.
That probably is pretty accurate, I would say. Probably fairly accurate. I
shaved my head.
You know, I actually had my best friend. He won a 50-50 raffle at a Arizona Cardinals game, and the pot was $88,000. Wow. And so he won 40 some odd $1,000 after taxes. It ended up being like, I don't know, 25 or something. But I've never met anybody that's won anything until then. And so now every time I do this, every time I go to a game, I always do the 2020 raffle because my best friend won. But it's also 50% of your proceeds go to the charity. So, you know, it's worth it to me to do that. Anyway, okay, I'm sorry. I'm getting on a rant. So one of the things that I'm a little worried about, and this is, you know, regarding the dollar, you know, talking about potential dollar weakness, is the cable. I think you have to kind of remove the pound out of the equation here. It's not the pound dollar, I think, is on its own program right now. It is in a very, tight triangle formation. You can see, look at the dotted lines just here. I'll actually make these a little bit more legible. Here, the dotted line, I think, is pretty much will show you what I'm thinking. But this, is the big triangle. We're stuck in the middle. We're in the apex. It's really choppy. It's very ugly. It's not something that all I know is I'm not really factoring the pound into what I'm thinking with the dollar. The pound could break out. We break 133 and we could see 134. And that might be what happens too, especially if the euro dollar ends up pushing higher and the Aussie and the Kiwi. If we end up seeing moves like that, then that's great. How many of you guys and gals shorted the dollar yen with me yesterday? Because I shorted it yesterday here. My cost average, and if you were on the webinar yesterday, I shorted it right here, like 40, I think 47 was my cost average. I closed it last night. We had a family gathering, so I closed it out last night at 23, somewhere around here. So I already got out of my short. I'm a little bummed out because I'm not short the dollar yen right now, but I am, just so you guys know, I'm looking to sell any type of rally because I still think, and you guys know my arguments towards the dollar yen, I'm still bearish, and I'm bummed out I'm not in it right now, but I'm not going to be chasing it either. But I still think the dollar yen looks bearish. So for those of you guys and gals, if you're still trading it on the short side, if you're still looking for it to move lower, I think it eventually makes its way lower. I just I happened to get out last night, so I could more or less focus on family and not on the markets. That's kind of what I wanted to do last night. But I think that the dollar yen still, this keep in mind, we're at the 38% retracement. We're testing it. Also, as I mentioned when Steve was here, we are really close to the 200-day moving average. So even if we push into new lows, you have to realize that there is a lot of support down here. And if you are short currently, you just have to, just keep in mind that there's going to be a lot of support down here. We might get one of those situations in the dollar where the dollar yen pushes lower, we hit new trend lows, we hit the 200-day moving average, and then we bounce. Because everybody's going to, if you think about it, you from an intraday perspective, how many stops are sitting down here, right? How many stops are sitting below that support? And if you have a name like Dale and you're a Forex stop hunter, then we might go hunting for those stops and maybe hit the 200-day moving average and bounce back up. That I think is possible. That's why I don't want to chase it lower at this point. And I may miss it. I mean, hell, I could be sitting here talking about it, and in the next few hours or maybe tomorrow, it's trading down here, and then I'll miss it, and then all I'm going to do is I'm going to sit around and congratulate you guys that stayed with it. But I think this is eventually going to happen. Whether we bounce here and then head lower, or we go straight down, I think is the either one of two options are going to happen. So anyway, I'm just kind of going through the process or the ideas of what I'm thinking is happening, or what I think is going to happen. A couple other charts we should probably look at. Here's the dollar Swiss. Dollar Swiss is going to have really key support at 98.50. US dollar Norwegian krona got a nice little bounce this morning. Not really too sure why. I have to look back and see why the Norwegian krona is so weak, but we did have a very, very bearish candle yesterday. I am short the US dollar Norwegian krona currently. The US dollar Swedish krona also had a nice bearish reversal from the 200-day moving average yesterday, and that thing's still trading heavy. So I'm assuming Norway had a little bit of data last night, which
Blake, sorry,
yeah.
Actually unemployment came out and it was stronger than expected. So expected 4.1, came in at 4. So data was good. Oil is going up. I have no idea what the krona is doing up there. But.
So, yeah. So what's happening with you? You don't know what's happening with the.
I don't know. I don't know is the answer. No.
That's interesting. You know, maybe it's one of those situations, Stelios, where, because I mean, I was short yesterday, made good money yesterday being on the short side. How many people got aggressively short yesterday and maybe they got a little wrong-footed this morning? But I reshorted it again, so I'm back in.
I think yesterday's price action showed a little bit of capitulation of shorts. You know, that big squeeze before the drop. I think that was a big tell. So I agree with you. Some people might have gone in aggressively yesterday, maybe getting out today. But I like being long Norway. You know that, against dollar and euro.
I got triggered short at 8.33, which is a confluence of the inverted head and shoulders target and the 61.8, and I'm feeling quite well of remaining with that.
Super.
Yeah, I mean, you got a really great price, Steve. You know, being short up in the 30s. Like I said, I was short yesterday in the high 20s and covered it, and reshorted again this morning. But hey, really quick, Dale, do you have an interview for today?
A great one. Yes. Rainer Teal, he's been in the house for almost an hour now.
Oh, great.
So live from Singapore.
Oh, fantastic. We have a Singaporean that's in our live chat named Nidish, which he's great. I've been chatting with him for years. And that's awesome. I love Singapore. Singapore is like one of those cities that
it's like Zurich of Asia.
I love it, and I'm really, at some point in the next couple of years, want to take my kids to Asia, and Singapore would be one of those destinations that we hit while we're out there. It's just a wonderful city, and it's other than it being very hot and sticky, and I sweat a lot when I'm there, but other than that, it's great. Hey,
or if you misbehave, they cane you there. You know.
That's correct. And
right, Rainer?
Do not chew gum. You can't even buy gum there. It's crazy. Okay, so really fast before you start your interview, I just want to wish everybody a very happy Thanksgiving, and whether or not you celebrate it where you live and where you're from, it is a tradition that we have here in the United States. It's a time to reflect and look back on what we're thankful for, and I'm thankful for a lot of things. You know, I'm thankful for this community that we have. I'm thankful for my family. I'm thankful for, you know, having the opportunity to trade the markets and live off the markets. But I'm very thankful for my health, and like I said, I'm very thankful for this community and what you guys and gals do to bring it all together, because it's not just Dale, and it's not just me or Steve or Stelios or anybody else in the team. It's what you guys provide every single day by being here, asking questions, giving charts for us to look at, providing your feedback. I'm thankful for everything. So thank you all for being here and being part of my life. And I hope you have a great long weekend or remainder of the week. Now, we won't be broadcasting on tomorrow or Friday, and if you use ForexAnalytix, just realize the updates are going to probably be a little less over the next couple of days. You'll get the daily updates, but intraday it might be a little light depending on the movements. But I always keep my phone and my quotes pretty close to where I'm at. So even if I'm celebrating, I've got a watchful eye on the market. So if something jumps out, we'll try to attend to it as quickly as possible, especially if I'm not in front of my computer. But anyway, thank you guys and gals for being part of all of this. It's you guys that make it great. So thanks again. Dale, I'm going to pass it over to you because I know you have your interview starting.
Happy Thanksgiving, Pilgrim. Glad our paths cross.
Same here, and thank you guys for all the wonderful comments. Really appreciate it. I can't read them all right now, but thank you all for those comments. So Dale, it's all yours. I'm going to pass it over to you, and you guys have a great couple of days. Thank you.
Okay, Rainer, thank you for your patience. Hope you enjoyed our session of analysis. I'm really looking forward to talking to you and seeing your screen, and really appreciate you taking time out of your day to be with us today, Rainer. I hear you.
Oh, okay. Okay, you hear me.
I can
Thank
hear you,
Dale.
buddy. And now I see
Okay.
your screen share. So great to meet you, and for the first time, Rainer, and have a conversation with you. I have to be frank with you. What caught my attention, and maybe you could show it to our community, is your Twitter icon. I mean, I think it's a great icon. At first I go, well, who's this egomaniac saying he's Superman? Okay, but great
Okay.
icon. There
I guess
it is.
this is the one here.
So, you know, the way I like to start, Rainer, is before you became Clark Kent and went into a phone booth to become Superman, what was it like for you at the beginning of your journey when perhaps you were a cub reporter like Jimmy Olsen?
So I guess it all started back in university where I got first exposed to trading. You know, a broker came down to school and organized a trading competition. So at that point, you know, I kind of think to myself, you know what this is all about, how difficult can it be? So, you know, I took part in the competition, and within a couple of days, you know, basically, you know, I blew up the entire demo trading account that was assigned to me. So that kind of, you know, spur interest and as you research more about trading, you know, the kind of get rich quick promises that is being promised, the freedom, the lifestyle, all the marketing tactics that, you know, I come across, the advertisement that kind of hooked me from then on, and that's how I, you know, went on and, you know, start studying about trading. So upon graduation, I knew I wanted, you know, to do trading, so I got a career as a proprietary trader in Singapore. Worked for a couple of years with the firm, and after which I left and, you know, to trade on my own and to, you know, to do this trading with Rainer.com, the website.
Okay, so who are your biggest influences? I see you have a book there. Is that did you write that book, Trend Following Guide?
Yes. It's basically
Okay.
basically a short guide towards trend following. So I guess that kind of spilled the beans to, you know, how I approach the markets as from a trend following approach, right? And, you know, as well as a price action trading approach.
So you kind of embraced, you know, what Rich Dennis taught the turtle traders, trend following. And let me ask you this, and, you know, I've read a little bit on your website. I really appreciate the humility. You know, you're saying you're not a multimillionaire, but you do trade, and you make a living off of the markets as well as mentoring people. Who influenced you? What books did you read? Was it Schwager's Market Wizards or anything like that that told you? Because I'm really not a trend trader. I'm kind of a reversal trader. Who influenced you, and how long did it take you to have some consistency in the market to become profitable? How many years?
Okay, I would say it took me about 4+ coming 5 years to become consistently profitable. And
Okay.
with regards to your question, I would say the biggest influence in terms of books is Market Wizard series. That's one. The
Okay.
Michael Covell, the book, the trend following book. And the third
Okay.
one that deserves a lot of credit is Following the Trend by Andreas Kleno, which is it's a very technical book on trend following. Yeah.
Okay.
So I would say to summarize it, I would say the Jack Schwager book is good for those who are starting out, who are not sure what type of trading methodology exists and what suits them. So that gives them a good overview. And reading the Michael Covell's book, the trend following book, that gives you the so-called explanation, or rather the studies behind why trend following works, basically emphasizing on the why behind trend following. And if you want to learn how to apply the how of trend following, you would have to read the Following the Trend book by Andreas Kleno. Yeah.
Okay, well that's a pearl. So you know, if you're interested in trend trading, Rainer just gave you the library for you, the steps for you that you need to follow. So I know you had some charts up here, but I also admire your mission. It says right up there, saving retail traders from self-destruction. So let me ask you this. Was it from seeing others or also the landmines that you stepped on yourself that you are able to teach people how to avoid them?
I guess it's through the years of frustration and going nowhere in circles that when I sort of want to give back, and I would say this is my way of giving back, right? Sharing the stuff that has worked for me, and hopefully it worked for struggling traders who are still out there navigating these waters.
Okay, you have some fans in here. Someone saying I could finally see and hear my idol. You need to do more live webinars, Rainer, because people have a hunger to hear your voice and get to know you a little better. Very interesting. What was one of the major landmines? Like, we all know our weaknesses. Like, I'm pretty good at entries, and what I struggled with was having the patience to hold positions to objectives and targets. It took knowing to take partials to help me get over it. What was your biggest psychological hurdle as a trader that you've overcome?
Okay, I would say the biggest psychological, I'm not sure if this was a psychological issue, but one of the biggest issues that I've struggled with was, hopping around from trading systems, just keep, trying everything because, I just didn't have the patience to follow through with one approach to see whether it works. I like to, dabble in everything and anything, and that only led to, more, I would say, confusion and frustration instead of, just sticking to an approach before deciding whether it works or not. So
okay, I call that the search for the Holy Grail syndrome. And
yeah, I definitely faced that.
Okay. So, also I read that, you said that there really is no secret to trading, that it's really, it's perseverance and hard work. So can you explain to people that there really is anyone that's trying to sell them a secret they should run away from?
Yeah, I would say that the secret is hard work, but then at the end of the day, right? Hard work to what? So for me personally, my belief is that the hard work that you put in just going there, learning about the markets, experimenting, and trying different stuff, and then afterwards you kind of find there's only a few elements or principles that will resonate with you and that works for you. So for me, for example, I've tried anywhere from A to Z, like for example, indicators, price action, trend following, counter trend trading, swing trading, day trading, scalping, and everything. And at the end of the day, right, I kind of find that trend following and price action trading, these are the basically the two trading approach that suits me best. And within this two methodology, right, I kind of like understand the nuances behind how things work. So for example, trend following, all I'm doing is I'm trading a wide variety of markets. I'm just entering my trades and hoping to see which does break out and trend really well. Those that doesn't, I cut my losses. Those that do well, I ride the trend. So that's pretty much the ideology, the behind this trend following approach. And maybe for price action trading, if you talk about price action, there's only, for me personally, there's only a couple of things that I find that works consistently with price action. One is what I call volatility contraction and volatility expansion. So for example, if you look at the markets, throughout any period of time, volatility doesn't expand all the time. It moves from a period of low volatility to high volatility. So this is why you have, patterns like the flag pattern where the market tends to contract and pull back after making a strong surge in movement. So within this volatility contraction, that could be an opportunity for you to get on board the trade if you're not already in the trade. So these are, some of the couple of, trading principles that has worked for me. Yeah.
Well, why don't we segue with that? And I know you had a chart up there, and I agree there is vacillation between high volatility times, and your lowest volatility formation might be something like a triangle where it compresses, one ascending line, one descending line, and the range is compressing to where there's almost hardly any range. So that tells you a big move is coming. What do you use for the trigger for giving you direction? Option players would just buy volatility, not knowing direction, but that they'll make money because volatility is so low, it's one side or the other will compensate for the other. What do you use for a trigger when we're transitioning out of low volatility into higher volatility.
Okay, so maybe I just share the chart and do some simple drawing to kind of illustrate my point.
Okay.
So let's say, for example, one of the so-called, I don't really like to use the word pattern, but the psychology behind this pattern is something like this. Say, for example, the market has been trending higher. You know, this is somewhat like a ascending. Okay, did I just lose the drawing?
Yeah, it was there and then it disappeared.
Okay, that's funny. Try again. Okay, let's try this here. Okay, it stays here. Oh, it's gone again.
It was invisible ink. You ever see those pens?
Okay, so never mind. I think I can use this tool over here. So this one, I mean, so basically volatility. I might just okay, let's see. So for example, I think Aussie dollar has won on a daily time frame. You can see, like, for example, this portion over here is, I would say, what I call a volatility contraction. As you can see that the volatility of the markets, right, has basically shrank, because previously you can see that, you know, this one over here, you have, you know, a huge expansion in price, and over here basically you have a contraction in volatility. So usually when I see, what I like to see is, I like to see the tightness of this pattern. The tighter it is, right, the better it tends to break out. And the entry trigger is pretty simple. I just have a sell stop order below the lows and I'll go short. And as for stop loss, right, I typically give it a buffer above this highs, like maybe say 1 time the average true range above the highs. Yeah, so I would say this is basically one of the patterns that I like to look to trade.
Okay, so Ellioticians would say that increased volatility is when things are impulsive, and conventional technicians would say low volatility happened during sideways or continuation formations, where patterns are just working off overbought, oversold, more in time than price. Am I getting you?
I'm not too sure with the Elliott wave, because I didn't really.
Okay. But okay, so let's just say that was a consolidation period that we compressed volatility before the last wave down in Aussie. So you said compressed volatility was one of the things, and expanding volatility. Those were two of the hallmarks that are pretty consistent for you. Did I miss anything?
Yes, no, you did, right? That's basically what I said.
Okay, so you it looks to me like on your charts you trade pretty naked, and you know, I don't see any indicators. Do you use fibs or anything else besides just price action? What are those horizontal lines that you have up on your chart?
Basically, those are levels that I believe are worth looking at. So, you know, some of them I draw my support resistance levels, right? Levels that I'm watching. Yeah, but I try not to have too many, because sometimes I get, you know, analysis paralysis from too many levels on my chart. So I try to leave the significant ones there. The minor ones, I pretty much can eyeball it without having drawing anything on the charts.
Okay. Also, what I really found interesting, and you know, a lot of people don't say it, maybe we're kindred spirits. You say that people should shoot for 25% annual returns on their account. And I know hedge fund managers that do cartwheels, and the internet sells, like, you know, 3-4 figure type returns, and that's just hype, isn't it? And 25% you're doing is really a good job every year, isn't it?
Yes, I guess.
How'd you come up with that number, 25%?
I guess the number is to kind of, like, you know, to burst those people who have hopes of, you know, making 100-200% a year, but rather to just bring them down to reality and, you know, discuss with them numbers that they could potentially achieve, you know, without losing everything. So how did I come up with 25%? So to be honest, I would say a range between 10, 15, 20, 25% are pretty good range. But again, that does not take into account, you know, your initial risk per trade, because, you know, anyone can make, you know, 100-200%, you know, if you risk like, you know, 50, 60, 70%. So I guess the other factor to look into is, you know, how much you're risking to make the kind of returns. Yeah, so I think that is more so-called objective manner. So I'll say, for traders who have a full-time job, trading is to them, part-time, where they can't, trade 12, 15 hours a day, shooting for anywhere, from, say, 10, 15, 20% a year, pretty much, numbers that they could potentially achieve, with the right trading approach. Like, for example, trend following, right? If you doesn't really require much time, and with a systematic trend following approach, right, 10, 15% a year, it's doable, and it's pretty much the kind of numbers that most, trend following hedge funds, have as well over a long-term track record.
Okay, so why don't we talk about how retail traders self-destruct? Why don't you give me like 2 or 3 of the most common things that people do, like FOMO, fear of missing out, impulse trading. What have you noticed in your mentoring career are the most common blow-up potential habits that traders have, retail traders have?
Okay, so for example, one of I see pretty often is, hey, this trade looks good. Let me, load this up, right? And no matter how good the setup looks, no matter how good the market is telling you, there is always the possibility of being wrong. So it does not make sense to me, to load up just because something looks good, because there is the possibility that it could just go the other way around. So I'm a firm believer in risking small each time you put on a trade. Yeah, not
okay.
something
So over leveraging is number 1.
Yes, that's one.
Okay.
Yes,
Give me
another one would be, I would say, under capitalization. Yeah, because when you trade, so for example, most people think they can take a $5,000 account, $10,000 account, and to trade full time and make a full living out of it. The answer is you can't. Unless maybe you're living in somewhere in a really underdeveloped country, and you're trading with USD 5,000, 10,000 USD, you can survive with 200 USD a month. Okay, that could be possible, but in most instances, where I think most of you who are listening to this webinar right now, we're all pretty much in developed countries, and that's just simply not enough, right? So what happened is, let's say a trader starts with $1,000, $2,000 account, and they have to make a living. I have to make, like, say, 1,000 this month to meet my needs. So with $1,000 account, sure, you can make 1,000 in a month, but the risk of you losing everything few months later is very, very high. So I would say that's one of the reasons why traders blow up, is because they are undercapitalized to start with, and probably they don't even have the correct expectations to start with.
Yeah, that's a great one. You know what I say, Rainer? People say, Dale, can I trade for a living with 10K? And I say, yes, if you want to live beneath an underpass. So that's a great point. So just letting people know that, so how do you tell people to overcome it? Are you a believer and profess that people have more than one income stream when they're trading? Even if they have a big account.
Yes, I'm a firm believer in having multiple source of income when it comes to trading. So like I've tell a lot of my followers, subscribers, I say keep your full-time job and trade part-time. Right? There's no reason to leave your full-time job, because your full-time job gives you the psychological need to succeed in trading. Because let's say, for example, this month or the next month you don't make money, your full-time job helps you pay the bills, which is a big plus if you ask me, because it removes the need to make money each month, and it's a really a big plus in my opinion.
Okay, so that's 2, being undercapitalized. How about people just not being suitable and really not? Yeah, not everyone can become a trader. Do you agree with me?
Yes, I would say a lot depends on their upbringing, right? For example, like I'm not here to talk about my mom, but my mom happens to be someone who just cannot endure the thought of losing money. For example, when for example, the market is ripe to buy maybe say a few blue chips to load up, right? She the moment she buys a few blue chip company, she would stare at a ticker all day long, even though she's an investor. So there are certain people who just have this characteristic traits where money to them is that they cannot spend or endure the thought that the money could be lost, right? So those type of people really should stay away from trading, because you're always dealing with probability of loss and wins.
Okay, that's great. So it's your attachment to money that may make you unsuitable, and not being able to detach. When you mentor people, and even if they drill down to a short-term TF, Do you tell them to manage it from, say, a longer term time frame so they don't get influenced by all the wiggles on an hourly, and maybe manage it from a 4-hour or daily?
Okay, so I always tell traders
If
to
not,
trade
you can use that.
Okay, so as I was saying is that I always tell traders to trade the time frame that suits them. So let's say, for example, you are someone with a full-time job. If you ask me, it does not make sense to be trading off the 15 minutes time frame or the 1 hour time frame because your lifestyle just don't support that kind of trading endeavor. So if you have a full-time job, it probably makes sense to be trading off the 4-hour or daily time frame. Whereas let's say you're someone who is perhaps you are semi-retired, you have all the money in the world, and trading is just something for you to as an intellectual challenge, or maybe something that you want to take on full time. Sure, you could actually move on and trade the lower time frames, like the 15 minutes time frame. So really a lot depends on your schedule and the lifestyle you're having, and the time frame is simply a function of it. So as you were saying, right, again, right, I don't suggest like, for example, entering off the daily time frame and then managing your trades on the 5 minutes time frame, because that time frame is noise to your trading on the higher time frame. Yeah, so it's always best to manage your trades on the time frame you enter off, or if you're a little bit more you're a little bit more able to tolerate the swings, you can manage it one time frame higher, and that's it, in my opinion.
Oh, okay. So a lot of traders really don't do this. I'm wondering if perhaps you through some of your work that you may have some views, since we're reaching the end of the year here, that certain things that you may see developing on the screen where you might have a bias for where the opportunities may lie in 2018. If that's not your style and you're just trading what you see, I could understand that too. But do you ever look ahead and have some biases for scenarios that you think are going to play out in the future, or do you pretty much stay in the now like a lot of traders?
Yeah, I pretty much stay in the now. I don't really have any bias. Yeah, so I pretty much just trade what I see.
Okay, great. So then why don't we go over and why don't you show people your website and the best way that they can get in touch with you and perhaps work with you. You have some fans in here, and someone's asking, could you mention those book titles again for trend trading? That's what David's asking. And
okay,
someone's saying, everything you write, posts, is incredible help. Warm regards from Berlin. I'm a Colombian. Listen to him. He is a person who understands what he is talking about. So your reputation preceded you in here. So these are your books?
Yeah, so this is the website. If anyone wants to, come down, is the tradingwithrainer.com, and these are a couple of trading guides that I've written. For those of you who are interested in trend following, it will be this. Those interested in price action trading, it will be this one. And there's someone who mentioned he wants a list of trading books, right? You can go to I've compiled a list of the best trading books that has worked for me. And if there's a blog post that I've written, here, the best trading books of all time. I mean, this is my opinion only. So for those of you who want, these are the list of books that I personally find great value in. Yeah.
Okay, great. Okay. Well, Rainer, it was great meeting you, and I want to thank you for edifying our community today, and that my hope for you the remainder of the year and going forward is that pips rain down on you, that wherever there's kryptonite, that it be in a lead box so it doesn't affect you, and thank you for your mission of trying to help small and retail traders survive what's a very difficult endeavor. Kudos to you, my trading warrior brother, and it's been a pleasure meeting you and having a conversation with you.
You're welcome, Dale, and thank you for having me, and I enjoyed my time. So thank you very much, and I wish you a happy Thanksgiving ahead.
All right. Thankfully you're with us today, the day before Rainer. Good hunting, everybody. Happy Thanksgiving. I'll see everyone on Monday, and remember, most of all, don't just count your pips, count your blessings. I count being part of this team and working with you and getting to talk to great mentors and traders like Rainer, a blessing in my life. So enjoy your holiday. I'll see everyone back on Monday. You're very welcome, Alina. See you, David. See you, Kareem. Adios, my trading warrior brothers and sisters. Enjoy. You too, Madras. Thank you, Rainer.